Viewers, apparently many stock strategists and TV news commentators are taking their cues from politicians nowadays. What do I mean? I mean, they're of the belief that if you say something enough times on TV, regardless of whether it is factually correct or not, it is the truth or it'll become truth, or you won't be challenged on your factually incorrect statements. Viewers, I'm Chris Parrish, Chief Investment Officer at Oak Harvest Financial Group, and this is our investment team's midweek release when we examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise? This week's topic? Well, it's the market's recent near vertical rally in the second half of March. This is a rally that many strategists on TV are saying it's just a bear market rally. But before we continue, please take a moment to hit the subscribe button and the notification bell so that you will be notified when we upload new content. Viewers, one of my favorite movies of all time is John Cusack's Say Anything. Apparently nowadays, much the same way politicians from both political parties can and will say anything to garner a few extra votes. Equity and stock market strategists and commentators on TV can say anything and get away with it unchallenged, even if the statement is factually incorrect. What am I talking about? I'm talking about the ongoing parade of bearish biased analysts and strategists on TV over the last 2 weeks dismissing the recent rally in the S&P 500 as just a bear market rally. Viewers, it was not just a bear market rally. How do I know? Because everyone, and I mean everyone I know in this industry or has read books about the stock market, has chosen over the years and decades to mathematically define a bear market as minus 20% or greater decline in the S&P 500. Viewers, we've discussed these arbitrary definitions in the past. I didn't come up with the number. I didn't just make it up. However, it's been used as the line in the sand and as a measurement tool by market statisticians for decades in the stock market. So far, if you top-ticked the best sale in the S&P 500 cash market and bought the lowest intraday cash price on February 24th, the market, as defined by the S&P 500, dropped minus 14.5% about. If instead you use the daily closing prices, that decline was minus 13%. Viewers, is that minus 20% or greater? Not the last time I checked. Did other more growth-oriented indexes drop into their own bear markets of minus 20% declines or more? Yes, for sure. Individual stocks? Yes. Hundreds, if not thousands of them. But was the S&P 500, which is what these strategists are alluding to? No. The S&P 500 didn't get there, which is why I can say with absolute certainty, which is almost impossible to say with a straight face when talking about stocks, that the recent rally was not a bear market rally. Why? Because statistically, the S&P 500 has yet to enter its own bear market decline since the COVID rally started in the second quarter of 2020. Will, over the coming weeks and months, the S&P 500 index decline into bear market territory this year? That would be over minus 20% peak to trough. My opinion, and it's only my opinion, is that this size decline remains highly unlikely this year for the S&P 500's max drawdown. But of course, time will tell because you can only legitimately declare a rally as a bear market rally after you've had a bear market size decline. Viewers, in my opinion, this term being thrown around is 100% noise, is being used by others to provoke fear in investors' minds. Recall that only 4 weeks ago, many of these same individuals were on TV throwing around the death cross terminology on the market lows on February 24th. Viewers, did this help you and your money one bit? No. Whether the markets are in a bull market trend, an ongoing market correction of between minus 20 and minus 10%, or one day down the road, a true bear market decline, give us a call here at 877-896-0040. Ask to speak to one of our advisors and let us help you navigate your retirement, because the future is always uncertain and unclear, regardless of whether other investors are calling it a bull or bear market. I'm Chris Parrish, and from the whole team here at Oak Harvest, have a great and blessed week.